Hello, everybody, and welcome to another episode of RevOps Demos That Don't Suck, where we take demos of some of the leading and most innovative technology products and providers that are out there so you can get a sense for some of the latest and greatest RevOps technology that can make a massive impact on you and your workday. And as is implied in the title, we promise, and the guys on the call today have pinky promise that this demo, in fact, will definitely not suck. And so, the guys who are up for that task today, I have Ollie Sharpe, who is the Chief Commercial Officer at Lative, and Werner Schmidt, who is the CEO and co-founder over at Lative. And Lative is a sales planning and capacity platform, essentially revenue orchestration. But I'm going to let these guys tell us what Lative actually is and also provide or add anything to that professional introduction that you guys want. So Ollie and Werner, I'll turn it over to you to first tell us a little bit more about Lative and yourselves.
Thank you, Matt, and thank you for inviting us along. And the pressure's on Werner. So if it does suck, it's his fault, not mine. But let's jump into a couple of slides we will show you, and then we'll jump into the demo as well. So as Matt said, we are Lative. So it is hard to classify us. So we spend a lot of time working out what we are classified as, what we do, and what we feel we do as sales planning and decision intelligence. That's what we feel the category should be called of what we do. As Lative, my name is Ollie Sharpe. As Matt said, I'm the Chief Commercial Officer. I've joined Lative 6-7 months ago. I've come from a background, I started my career really at LinkedIn for 10 years. Then I grew SalesLoft in EMEA, got it up to quite a large company, and then left and joined more startups. And I've spent some time in the FP&A SaaS space as well. I'm going to hand you over to Werner to talk more about himself and why the company was started, and we'll then go back to me.
Thanks, Ollie. And Matt, thank you very much for having us on. As Ollie mentioned, we're going to absolutely try and make sure that this won't be a demo that sucks. So it'll be structured a little bit differently than probably the normal demos. But from that, myself, Werner Schmidt, I've spent 20 plus years in RevOps back early in 2001 to when it wasn't even called sales ops. Even back then, it was just ops or order processing, all the different names of the functions of what we were doing. And that's where I started to learn how to organize sales organizations in the most effective ways through technology, systems, tools. Processes, big piece of it, looking at it then moving more into enablement as we started to get a bit more scientific and thinking a bit more about how we can upskill salespeople in their roles and the organizations to be more structured. And really it's been a fantastic journey and being able to grow very fast in some of the SaaS businesses I've been involved in, which has been, a lot of learnings came from that, and hence how we then founded Lative. So I got to meet my co-founder, Laura Totosa. When I was at Sage, I was running global enablements at Sage, and Laura's looking after the GTM tech stack. And we're just looking at that going, look, we're rolling out Salesforce to the organization, for example. What impact would that have on the productivity of the sales team, and how could we measure that? It was very difficult for us to do that at the time. Looking at things like contribution, and especially the big enablement programs you're rolling out, how do you see did the productivity go up? Did it go down? What's the capacity of what the sales teams need to look like for this year, next year? All these questions we're trying to answer ourselves. And from that, we decided to found Lative and build Lative. And really, as it says on the slide, it was out of our frustration of not being able to measure the impact of the sales team's true contribution. And that's how we've landed with our vision here, which is really about empowering companies to grow efficiently by making better decisions.
And so, which leads us to our mission, which I'm going to dig into a little bit more. So our mission as a business is to help companies build and achieve their sales plan to meet company objectives in the most profitable and efficient way. The reason why we do what we do, so the world of sales and RevOps has changed. Not only is RevOps quite a new role in the industry with new titles, etc., but lots have changed. It used to be, most companies used to be growth at all costs. Now it's completely different. It's about driving efficiency. So that's changed, but efficiency is more important than just growth. Sales being a top line on companies' budgets tends to get impacted early and hard, whether it's growth or reduction of forces, then it gets impacted. And RevOps has evolved from become a strategic partner to the CRO, but also the business as well. I think back in when I was at LinkedIn, sales ops were started as very much a reactive resource, and they've become a proactive partner. And I know I saw that change when I was at LinkedIn, and that's really important to understand because the role has grown a lot. Because of the importance of this role needing to be that strategic partner, there's pressure on RevOps, sales ops professionals to be able to answer 3 key questions at any time. So if anyone comes to you, you should always be able to answer, first of all, will we hit our number? Secondly, how will we hit our number? And third, how will we hit our number in the most profitable way? They're the 3 things really that we feel the RevOps get tasked with a lot, answering those questions. But it's not easy for RevOps because some things haven't changed for them. They're still using a lot of manual processes with dispersed data, using spreadsheets. This was, I think it's from the 80s, I think, spreadsheets, and we're still using them with numerous tabs, different versions. There's a lack of granular historical and real-time data that you can have access to. It's not at your fingertips. And also, when you need to make any decisions, it's normally you're limited to a number of hypotheses you can test. Is A better than B? But you can't say what is the best thing to do. So all of these hold you back a lot of the time from answering the 3 key questions. But let's look at those 3 key questions, because really it's 3 measurements that we talk about a lot, and just clarify what the wording we are going to be using. So first of all, will we hit our number? What that is capacity. So how many people do you have, and what is the productivity of those people? Should tell you, are we going to get to our number by the end of the year, etc. So that's one important metric we should be looking at. Productivity. This is about how will we hit our number, i.e. if we put people here and we grow here, will we get to our number? Will we reach the capacity? The formula for that is revenue per rep over a unit of time. And then the third part is efficiency. How will we do it in the most profitable or efficient way? Is efficiency, which is productivity divided by cost. And what you will see in all of those, productivity is on its own there, but also to work out capacity and to work out efficiency at a granular level, you need to know productivity. That's why productivity is at the true core of our product. And that's what's our big differentiation above other products. So productivity, as I said, it's revenue per rep over a unit of time. And when you've got 5 salespeople, it's not complex. You can maybe do it in a spreadsheet, but as your team starts to grow, it becomes more complex. And when you're making big decisions or doing your plan for the year, the more granular information you can get, the better. So when you're looking at productivity, when you're working it out, you've got to take into consideration all of these different factors. For example, in the time we're measuring, was this person ramping? And if so, was it an internal move? Was it an external move? When planning, you need to know that. If you're moving someone internally, it's going to impact your revenue. Tenure, how long were they there? Normally, second year, they'll bring in more revenue than the first. Internal changes, were there any changes happening in the time we were measuring them? How much of that time did they actually work? Were there any role changes? But also the role itself. So when you're looking at your sales team, if you're treating everyone as the same, then you're just dividing your revenue by the number of people. But really, to get granular, understanding what type of role they're in, whether it's new business, account management, or split, what products they were able to sell, and what market they were targeting, whether it's a vertical, a segment, and what geography, that's where it becomes really complex. And when you're a larger company, if you don't have this, it's hard to actually do your planning and make the right decisions. So hence why productivity is the core of what we do. Giving you more information about what we do, and we will jump into the demo in a couple of seconds. First thing that we do is we enable you to analyze. So there's 3 things we do. It's analyze, plan, and track. First of all, analyze. So you can analyze your sales performance, productivity, and efficiency. Granular analysis to understand profitability and efficiency across your revenue organization. So you can analyze trends across unlimited business dimensions. So this is whether geography, all of the different things that I looked at productivity, but also understand ramp times across those business dimensions as well, and drive the optimum return of investment by focusing your sales representative's time. I'm going to now hand over to Werner, who's going to talk to you more purely about the analyze before we come on to plan and track.
Great, thanks, Ollie. So you should be able to see my screen now.
Yep.
Great. Okay, so first thing we've got, as Ollie mentioned about how we analyze, plan, and track. So let's focus on the analysis piece first. So in the home screen of Lative, we've got 4 key pillars. What we believe is the 4 key pillars, well, are the 4 key pillars to profitable, efficient growth is one, what is the current productivity of the sales team and what are they delivering? As Ollie's already explained, this is the amount of revenue by a salesperson on average across a unit of time. So very important, fundamental. You're going to hear us talk a lot about this because this is core to Lative and should be the center of how you view your business. Secondly, we get into things like efficiency. We live in a world of efficiency now. The idea of this, surely you're going to grow fast and you can add a lot of sales heads. That's true, but you've got to be looking at how efficiently you get into that number. So this is where we can see for every dollar you spend, what's the return that you're getting back? Normally, ideally in SaaS businesses, you want to see a 3 to 5x return. In this case, it's $2.72 back for every dollar that gets spent. Third pillar, capacity. What's the productive capacity of what the sales team can deliver by the end of the year or the period that we're looking at? So this is where we start to look more into the future of what the teams can deliver. And then the fourth pillar is just headcount management, right? How many heads have we got? Where are we on our hiring plan? Are we behind? Are we ahead? Of course, that all impacts productivity and then therefore impacts capacity and of course efficiency as well. Great. So just digging down into productivity, let's start there first. So with Lative, when we switch on, we've got a number of integrations. We're on the Salesforce App Exchange, for example. We're on HubSpot. We're on Snowflake for larger organizations and so forth. So onboarding times are really fast. But what we want to do is we're able to get the data to start transforming it to give you your productivity data. As Ollie showed, it's really complex because of all the data movements. So we handle all that work for you to say, look, on average for the period we're looking at here, this is year to date, and we're looking at the sales productivity of $248,000 per person. And we can see on the far right there, that's by 84 salespeople. Okay, great. How did that productivity become 248 throughout the year? We show that to you month on what the teams have been performing at. And what we can also do is start, what's very important about productivity is you want to compare it. How does that compare month over month? How does it compare quarter over quarter? Because generally you want to see your productivity going up. In this case, we're seeing productivity go down. That's not a good sign. And generally when we see that in data, what that means is that you've been hiring a lot of salespeople. And there we can see it. We can see how many salespeople are still ramping. So there's a number of salespeople ramping. We can see how many have transitioned to ramp. We can see how many are fully ramped, but we can see there's a number of sales heads being added and therefore the productivity has been dropping. And that's the issue. That's the issue where we want to help companies understand this so that you don't see this. You want to maintain productivity at least, or see your productivity going up. The other big piece is that you can start to see more detailed looks of your productivity and how that's been performing across your dimensions. So that, but in this case, it's region. I can see the North America productivity versus the EMEA productivity versus the APAC productivity, and I can see how many salespeople are on each of those and so forth. So moving on to there, why we start there, we need to understand current productivity because that starts to allow us to start doing more productivity analysis now. So we can start to look at it by how the teams have been performing from a ramping schedule standpoint. How fast do people, when they come into the business, ramp within the organization? So we've said you can set up your business trees. We've got this by region and opportunity type. So we can see APAC here. Let's pick on APAC, new business and so forth. So we can see in month 1, what does someone produce? In month 2, in month 3, and so forth. And what we do is we build this all out for you so that you can see what the performance looks like for any new hire coming into the business, or even what salespeople produce in year 2 or year 3 or year 4, whatever it might be. So very powerful analysis certainly helps you where you think about enablement teams. This is data I always wanted to have to hand so I can see if the enablement programs are working, the onboarding programs, or any of those pieces. The next piece we're going to start getting into is efficiency. We live in this world of efficiency, as I mentioned earlier. Okay, so what does the efficiency look like when we start to bring the costs into Lative? So what we can do is we load the costs. You can have as many buckets as you need. In this case, it's just base salary and variable compensation for the 84 people. $8.8 million year to date. That's what we spent. We can see the average cost per head is 105K. Okay, great. Well, we know productivity. Now we know your cost data. Now we know return on investment. So we're seeing there's that $2.74 that we're getting back, and we can see how that's been trending over time. But really important to understand this because this starts to tell you, when do I hire more people or when don't I? Do I need to slow down hiring or can I continue to hire? Because if your ROI is increasing like this, great, continue to hire people. But if you're seeing it drop, then in that case, you probably want to slow down your hiring. And then, of course, you've got the deep analysis down here at the bottom, where again, we've got it set by region. We can see that North America has actually given us a much higher return at 3.04, then EMEA at 2.68, and then APAC at 2.40. So very powerful to this understand how efficiently you are getting to that number. And that also then leads to how you bring this all together to see your organization. So what we tend to do here is look, if I look at these 89 heads, how many days on average is it taken to ramp? We can see 267 days. What's the time to first deal? On average, it's taken 108 days to get there. How many people do I have? How many people have moved to be fully ramped? And so forth. And what was the first, November? How many people? What was the average number of the productivity numbers that we hit for that period? And then how has that also evolved over time? You want to see this over time so that you know if your programs and the effectiveness of what you have in the RevOps teams are having on the organization and the enablement teams is actually working and paying off. So very important data to be able to look like. And of course, you've got a lot of granularity that you can go to. So I'll stop there, Ollie, and hand back to you.
Yeah, and that ramp piece is critically important. I know past experiences, a lot of times it's just something that teams, I think, assume and don't really have data necessarily to back up, and then just blindly apply that to a lot of the new folks that they end up hiring. But again, in that example, right, you had 84, I think 84 reps. They all had to be hired at some point in time. Just think if you're off on those assumptions by a week, 2 weeks, a month, right? Like, may not sound like a big deal for just one person, right? A week or 2 weeks. But when you multiply that across your organization, that's a lot of selling time or non-selling time, depending on which direction you get it wrong. So when you think about planning and answering some of those questions that Ollie mentioned before of, hey, are we going to hit our number? How are we going to hit our number? Being off on what seems like a small thing on a per person basis, again, multiplied over a large team, can actually have a really big impact and make you look foolish or silly
Yeah,
because
we
you can't
we
answer
had
those.
something similar to this recently where we were talking with a company and one of their regions was taking another 50% of the time on top to ramp. And they weren't aware of that. But what had happened is because that was one of their biggest growth areas, that's why they misplanned the year before. So it does have a big impact if you're not actually understanding how long it takes to ramp. You bring your headcount forward and you can still hit your number.
Yeah, and a lot of the time too, we from organizations is, and I know we used to do it as well in my, throughout my career, we just go, how long does it take for a salesperson to ramp? 6 months. 108 days, and that's just the number we'd go to, but we didn't actually know. Was it 5 months? Was it 7 months? And to your point, Matt, you multiply that out by bringing 5 or 6 people in, and in my case, I was in large organizations where it'd be 50, 60 people. It's substantial, and you really do need to know it, but very hard to get to this data because you got to understand the productivity pieces. So it's cumbersome to get to it, but crucial for absolutely understanding where the business is today and how you then plan for that. And to Ollie's point, you always look at the numbers and go, oh, we'll just add 5 more people and that'll help us get to the number. But when you don't know how long it's going to take to ramp those individuals, and in the case of APAC, you're going to end up missing your numbers, and hence to the earlier points that we've spoken about.
Oh, okay. So that's the analyze side. When we look at that, the benefits of being able to analyze the sales performance, productivity, and efficiency, it means that you can save time by reducing your manual processes and inefficient tools, which most companies still have. Improve the accuracy with granular real-time data, which provides you a single source of truth with no errors or inconsistencies, and also make quicker and more informed strategic decisions and provide the right advice to other people within the organization. So that's first analyze. Next, it's plan. Plan is about short and long range capacity models. So bottoms up capacity planning with what if scenarios to hit your short and long term growth targets. So you can plan and optimize your strategy based on market potential and performance rather than doing it blind. You can model productive capacity based on historical data so that you stop over or under hiring, and incorporate future strategic initiatives to see the impact on the plan. Over to Werner to show this bit.
Great, thanks, Ollie. So how's this all starting to come together? So let's get into the capacity planning where Ollie started there. So fine, so now you got your productivity, your sales, your headcount, and so what does that mean? Now, the analysis piece has given us indication of where we are today. But what we need to know is where we're going. What's the future going to hold for us? And this is where we really get into capacity plan in both short and long range capacity plans. So in Lative, you've got the ability to say, okay, let's look at this by dimension. We've picked region here. And we're going to set a short and long range because it's November 24 from this month onwards to December, end of calendar year next year. What can this team deliver? And we're saying, look, there's 112 people in this case, and this team should be able to deliver $42.6 million of capacity, or that's the productive capacity of what the team can deliver. And so how do we know that? First of all, we know the head count. We know where the heads are, and we can see where they are, and we model that out over the period of time that you want to look at. We've got some unassigned people here, so you know you need to assign them. What you can start to do is to say, okay, look, in that example, let's pick on APAC. We'll pick on each region. In APAC, I'm going to hire a head in December. I'm going to hire a head in January in EMEA, and I'm going to hire a head in North America in February. And what you've started to see happen is we've added the hires, and you started to see this productive capacity starting to increase. So as those people have come into the teams, now we can see the teams have produced more. So back to that question, how do we know? We've added additional headcounts, and this can be taken to an FTE level because we know that not all heads are always focused on sales. But what we're looking at is saying we also know the ramp times. So if we look at that example in EMEA, we know we've got this new person starting, and we build in the ramp times for what we expect that person then to deliver in APAC. And in this case, this person will start at $5,000, then deliver 11, and then so on. I won't get into the details of how you can change the methodology of your ramp schedules and so forth. There's a lot you can do to plan that, but at least you get a sense of how you can add your heads and very quickly model where you expect to land. The next big piece is strategic initiatives. So we all do them in RevOps. Of course, the RevOps teams and enablement teams wouldn't exist if we didn't have strategic initiatives. And what's the goal of strategic initiatives? Is to increase productivity. It's to make the business better. And that all comes back down to productivity. That's why this is central to us and our core foundation. So let's look at North America, and we're going to say in December, we've got some heads that we've hired. So let's start. We're going to create an onboarding program for that team. So 1 second, let me just put this in there. So we're going to call this onboarding. Okay, so that's the new onboarding program we're going to roll out. And then actually what we might have, the product teams have said, well, actually in January, we got a new product release coming out. Okay, great. So what's the product update? And let's just add one more. And then we're going to say, great, well, we've got another initiative that's happening in February. So let's add a third one here, and we call that channel uplift. Great. So these are 3 strategic initiatives. So what we're able to do now is say, okay, on that channel uplift that's starting in February, if we expect a 2% lift, what does that mean from a productivity standpoint? So that means in North America, each salesperson needs to generate $425,000 of productivity in February. In March, they're going to need to generate that 2% lift means $535 of productivity lift per salesperson. And so you go back to that onboarding program at the start. So it starts in December. Let's say it's a 1% lift in December, 2% lift in January, 3% lift in February. We can actually see again what are the productivity lifts that we expect for the sales organization that are part of that initiative. And again, there's the product updates as well. So very powerful way to do true bottoms up capacity planning. And as we've added those, I'm not sure if you've noticed, but you saw the productive capacity increase. Now we're at $44.1 million. That's what we should be able to deliver by the end of next year. And we've done that through looking at the headcount plan, either adding heads or removing heads, or maybe you're changing heads or whatever it might be. We've looked at the ramp schedules and the productivity numbers because we fast forward the sales team into the future so we can see what their productivity is, or you may need to adjust that. So now I get average productivity targets that we're able to then view against. We've looked at the strategic initiatives that we're bringing into the business and what's the impact going to be on those strategic initiatives on productivity and what the uplift is expected. We always look at the costs. So we will always bring in the costs so we know return on investment. But what we land up with now is you've got a capacity planning model that's telling you what your capacity is, in this case by region, of what you should be able to achieve month on month until the end of next year. But what is the average productivity they need to be by salesperson? And that's how we build up the capacity plan. So truly bottoms up and very powerful. Now that you've done that and you've done it and you've built all your models, And you can do a number of these scenarios. We're in a simulation there. You can have multiple simulations to see all different options of what you would like to do. But what we're going to do then is get into annual planning. So I've created an annual plan here. And this is, Matt, where we're really taking things to the next level. Because what we're doing is we've spoken a lot about productivity now, capacity, efficiency. But there is a world where you've also got to do the top-down plan. So how does the targets and the overassignment and the quotas, how does that marry up to this bottoms-up plan, and what's the gaps that we need to solve for? So in this case, what we do is I've set a number here. So we're in the target. So now you can say finance has given me a number of 20 million to hit. I need to distribute that across the organization. So I'm going to set the seasonality. So now I've got the seasonality. We've set this evenly. So 5 million per quarter, all well and good. This is dimensional level. So you can set it down to what's the new business finance number that I need to hit at or deliver. So it's multi-dimensional. What's the overassignment rules that I'm going to roll with? So in this case, we set it up with five levels. So you've got your CRO, your VPs, your sales VPs, your sales directors, sales managers, and then your sales team. So you might have a 10% lift or maybe a bit more from what the finance number is giving you to what you're actually going to roll out to the organization. And then what that allows you to see now very quickly is exactly what is the targets they need to be at the CRO level or whatever level it is within the sales organization. So very quickly, I've now been able to see in January, what's my new business target? It's $278,000. Same in February and so forth. So very fast, I've been able to take a target, distribute that within the organization, throughout the sales organization. And that's where we get into a really powerful piece, which is now the quota setting. So this is where I can go look at the sales team. And now I can say, I know I've got a target of 20 million to roll out. But how much quota do I actually have deployed out to the street, to the sales team? So in this case, I can actually see, here's my CRO. I can see the VPs that then report into the CRO. And I can see exactly what quotas we've got rolled out, what that looks like month on month. But what's very powerful to understand here is we summon it all up to now see, okay, how much quota have we got assigned? What's the direct reports quota? What's the street quota? And so forth. But I can start to compare that to what's the target. We just did target. So where do I compare to the actual target? Because I need 20 million assigned. I got 20 million to hit. So I've got 20.4 million rolled out at Susan's level. Okay, great. I'm a bit over there. And my direct reports are well over that. I've got 30 million. So we're well up. And then I got street quota, I'm down. So I need to go look at the sales team and see, I haven't done all the allocations to the sales team. And therefore, I've got to figure those pieces out. So a very powerful way to understand and manage all your quotas and visualize what those look like. Because ultimately, what you're trying to answer here is how much quota do I have it rolled out at each of the levels within the organization? What's my overassignment percentage running at? And what's my real overassignment percentage running at? Because that's now your top-down plan. So within Lative, you can now do your planning, not just from bottoms-up capacity planning, which you saw earlier, but now you can do it from top-down as well, from what the finance number is to actually setting the quotas and rolling the quotas out to the team, and then comparing those quotas of how they compare. And then, Matt, I'm just going to 30 more seconds on this one. The other thing is because we're inside the plan, what we can now do is we can go into the capacity planning module, and we can compare now the same sales organization of what we've just done with top down. So there's Susan, there's the four VPs reporting to Susan. And I can compare that to what the actual capacity or the actual target should be. So now I'm looking at how much capacity can this team deliver versus what have we planned for in quotas and targets, and do I have any gaps? And what this is telling me is we have to hit 20 million, which you saw earlier. Susan's uplift is 2% on the 20 million. So she has to hit 20,400,000. But she's got capacity to actually deliver 32 million. So no issue on hitting the number. But that's how powerful this is, because now I know what the average productivity needs to be in January. I know what the average productivity needs to be by a salesperson. So for the first time, you're now able to actually look at your top-down plan married with your bottoms-up operational data to see if you've got any issues. And then, of course, we've got the whole headcount planning module, hiring plans. Do I need to hire additional heads, or what that might look like, and so forth. So I can apply that. I can add three people in. That'll update capacity planning. I can model a lot of areas like we've got to factor in the recruiting phase. So we got to this person's recruiting. We always got to build that in because it takes 3 or 4 months to recruit people. So I don't want to get too much into the details here, but it's a very powerful way to manage all your headcount. Look at things like attrition. We always got to factor in attrition. What are the attrition levels that we run in at? We can model those and track those all for the organizations too, and use that for planning. So I'll stop there, Matt. Covered off a lot, and we don't want this demo to suck, so I'm not going to go too deep. But I hope the visuals are giving enough information for everyone that's on the call watching this to see, by switching on Lative, the capabilities of what you've now got to really think about being strategic in your planning, but using your operational data to actually help guide you. And ultimately, are we going to be able to hit the number? And do we have any risks in the plan that we need to go look at?
Yeah, no, that's great. And I thinking back to all the times that I've done, or I'll say tried to do stuff like that in spreadsheets, right? You hard code certain cells when you're doing strategic initiatives, like you said. And then it's always one of those things where other people on the team start asking questions of, oh, what if we did this? And you make some changes, you give them an answer. They're like, oh, what if we also did this? And you're like, every time you got to say, I need more time to figure that out. And then the last thing you want is for them to say, what if we did this, that, and this other thing? And then you got to start making all these manual changes to the plan. And it's just a lot. And it's inefficient, it's manual, it takes a lot of time, and ultimately doesn't give you a lot of clarity into how you're actually going to answer those really important questions that you guys hit on at the beginning.
Oh, yeah, I agree, man. It's so you're right, because it's like version 18, 19, 20, and then you forget what the changes were. And like you said, everyone loses not faith in the spreadsheets, but you're just so lost in what's happening, and you've got an idea of where you want it to land, and that's then what you run with. But in these cases, the details matter. That bottoms-up operational data is crucially important, and the whole real-time capability needs to be there to really just identify those risks and those opportunities. And that's, to your point, Matt, that's what we're helping with.
Cool. Okay. As you said, we've talked about the planning side, how you can plan the business, capacity planning, short and long range, but also you set your quotas. What that means to you guys is that you can drive efficiency and collaboration in the planning process. You can build an achievable plan for optimal efficiency that meets company objectives, and you can hire the optimum number of people. This is avoiding overhiring, as we talked about earlier, causing overspend and attrition, and also underhiring, which leads to missed market opportunity and missing target. That's plan. So we analyze, plan, and the third part of the jigsaw, track. We help you track execution versus your annual plan. So we connect the top-down plan with the bottoms-up operational data to identify risks and opportunities. You can track actual ramp times, tenure productivity, cost efficiency, and the impact of those strategic initiatives that have been planned, like Werner showed you. You can track performance metrics versus target and future capacity. And you can also course correct headcount and quotas to hit plan. So I'll let Werner show you that in more detail.
Thanks, Ollie. So back to the annual plan of where we were. So that was the demo. There's the 20 million. So what you can do now is what we do is we say that's approved. And this is where Lative really does take it to the next level, because now I've got an approved plan. It's active. There's the plan. And what we're going to do is we're going to go into that plan now. And what this does is saying, right, from the annual plan I've just set, from top down, from the targets, the overassignment, the quotas that we've set, any headcount plan and so forth, we won't go through all those pieces, but how am I doing? Because Lative is connected to your data sources, we're seeing the data in real time. So you get a real-time visibility into how much quota do we have. We had 22 million planned, where we still got 22 million planned, fine. Our overassignment percentage is still running at 109 against 109, fine. But our hiring plan, we're supposed to have 6 people, and we have 4 people. This always happens. You're always behind plan on the hiring plan. Therefore, we're too short, and that's going to have an impact. What's our attrition rate running at versus the target we've got? And importantly, what's the target productivity and where are we? And then, of course, we've got ROI, which we didn't set up when we did this demo. But very powerful now for you to be able to see actually how am I tracking to the plan that we've activated at any point. And really, what this starts to show you is it starts to give you a good sense very quickly. Do we have a problem somewhere? Do we need to go course correct? Or do we have an opportunity where we should go do more? Because I'm actually seeing how we're performing against that whole plan that we've put together, be it the strategic initiatives or these key core, I should say, KPIs that we need to track to. Because if our attrition starts ticking up, that's going to put risk into the plan. If we buy behind on the hiring plan like we are here, that's going to put risk in. If our overassignment percentage is starting to drop too low from where we wanted, it's going to cause problems with the sales team being able to hit the number. And so forth. That's pretty much it. I won't go into each of these to show then how you can track the actual execution against it, but you get the picture, I'm sure. And that's the whole execution piece.
Yeah, and I feel like that's such a huge missing piece to like doing this in spreadsheets. Again, I gave the example before of the hard code stuff. You get up to version 18, like you said, and then once you get through planning, you're like, okay, we've got our plan. But having to go back to a spreadsheet and figure out a way to dynamically and quickly input actual results against that plan and then like reforecast if you need to or understand what changes you need to make, just like super time intensive and kind of impossible to actually do. So a lot of times you don't end up actually doing this last piece of measuring your actual results against the plan in real time. It's one of those things where it's like, oh, hey, we're halfway through the year, right? Or not, well, we're one quarter in. Let's do this big reforecasting exercise, right? And it's one of those things that takes just as much time and effort and energy to do as it did to put the original plan together. And ideally, that's not what you want. You want to be able to look at this stuff on a daily, weekly, bi-weekly, monthly sort of basis to understand how you're trending and be able to pull those levers in real time instead of having to wait for a quarterly or biannual reforecast to happen before you figure out if you're massively off, right, on how you're actually performing versus how you thought you'd perform.
Yeah, and I think we hear more and more companies now, they're looking to do more continuous planning rather than just at the end of H1 relook at the plan, look at it on a monthly or quarterly basis. And I think that is where it becomes even more important. And it's when Werner was talking, we talked about course correcting headcount and quotas to hit plan. When you find that risk or even an opportunity, you can jump back into the capacity plan and start relooking at your quotas, your headcount, and all of those kind of things. And you have unlimited simulation, so you can or scenarios that you can build. Okay, how do we're 2 million behind where we need to be, how do we get back to it, where do we put the head count, and there may be 3 options that you want to look at and put in front of the board. And so you're always finding the best way forward without being limited on the hypotheses that you can test. So jumping back in, so track, as Werner showed, execution versus the annual plan. What this means is that you can identify and alert others of risks and opportunities faster, and also course correct headcount and quotas to hit plan, like I just mentioned. You can save time by always having access to the granular data and instant scenario planning rather than having to come back to you in 2 days, for example, like Matt mentioned earlier. And also increase visibility of the performance of the sales organization using the multiple dimensions. Whether you want to talk to the product team or whoever, you've got the dimensions to break it down to add more value and increase visibility across the business. So that's it. Analyze, plan, and track. What that does, how it impacts the business for a company with Lative. First of all, it saves time. So the people using it, they become more efficient and with less manual processes. You can save time when you're identifying risks and opportunities because you're doing it faster, and also find the right course correct. And the real-time data gives you immediate and effective decision-making there and then on the spot. So you're saving time, you're becoming more of a strategic partner to the CRO and the rest of the business because you have that granular data for increased visibility. So the data is actually relevant to the person you're speaking to. You can track the key metrics to make better investment decisions, and also scenario planning to see the impact of the future decisions. It impacts how you work functionally across the business. So the data aggregated cross-functionally, you can make a larger impact across the business and its strategy. But one thing we have heard from our clients already is that they feel better equipped to influence internal decisions when someone gives you, okay, we've got to get to X revenue. Having the data to say we don't have enough headcount to get there, we need at least 3 more people, for example, that's equipping them to have the right conversations internally rather than just going blind into what they need to do. You can help achieve the company revenue objectives, so capitalizing on market opportunities where your productivity is the highest and also pulling back where it's not. Data-driven growth and investment decisions in real time, so going quick and being agile to adapt to those market conditions with optimized hiring, and impacting the profitability and efficiency. So effective planning to have an optimized organization, revenue efficiency capacity plans based on bottoms-up operating data, and improved resource allocation. Again, we talked about avoiding over or under hiring, which is missed market opportunity or just spending too much on talent. That's everything that we impact, and that is the end of the slides. Thank you to Matt for letting us show this, and hopefully the demo hasn't sucked.
Definitely hasn't sucked. I appreciate y'all walking us through that. Just a couple of final questions here. Werner, you mentioned integrations a little bit. I heard Salesforce, HubSpot, you're able to pull data in from Snowflake. What are some other common popular integrations that you guys offer and have for your customers?
Yeah, Matt, we've got a number of others too, because sometimes we work with consumption models, right? So you got to pull in, okay, what's the subscription data that we're loading from an opportunity standpoint from the CRM, but what's the actual billing that happens? Because later we can into a data aggregator, so we can bring both sets of data in. So for there, we then go into the ERP systems, or sometimes it's even homegrown systems. Not that we've got it, then it requires just CS uploads that we can handle as well. So there'll be manual uploads, or we might even set up old school ELT, whatever it might be. So that's pretty much, yeah, we've got a lot of flexibility there. We've got about 150 data connectors now into other parts outside of the main ones that we've already, our strategic partnerships with Salesforce, HubSpot, and Snowflake.
Nice. And for some of the initial setup or implementation, there's obviously the platform is super powerful. We just saw all the things that it can do. For someone who maybe wants to give it a shot or kind of understand how long it would take to just get rolling, what's a typical timeline or time frame look like from the time that someone says yes to the time that they can start to see and use the platform?
The biggest thing for us, certainly if you're a Salesforce or HubSpot customer, or even Snowflake to that point, is that we can, the apps, because we built the app, so let's pick Salesforce. On the Salesforce App Exchange, you download the app, it takes about 10, 15 minutes. We configure your dimensions of how you want to view your business. Once we do that, we look after the rest. We need about a day of configuration just to get everything set up, and then you're up and running. Productivity is up and running. Then it's okay, great. Should we get some costs into the team so we can see efficiency? Okay, great. We've got efficiency up and running. That some orgs can choose if they want to do that or not. We're very conscious that cost data is very sensitive, so sometimes we just won't go down that path. But then let's focus on capacity plan, and that will all be switched on already from that initial half an hour call. So all in all, Matt, it normally takes about a week, depending on timings to schedule the meetings. But certainly by the end of the second week, you'll be up and running with the majority of it. And then it's up to you to decide, when do we set the annual plan? When do we set the quotas? We very much work with the organizations to do that with our customer success teams, making sure the teams are utilizing Lative to the best of their ability.
Yeah. And you mentioned some of the customers, I think Ollie mentioned at the beginning that you all have. Who's typically a good fit for the Lative product, and who are maybe some examples of customers that you currently have?
Yeah, I think there's, once you start getting to a certain size, as Ollie was pointing out, the data becomes a lot. So if you've got 5, 6 salespeople, you're probably going to you can manage it on spreadsheets. Probably all of this is done on spreadsheets. Do you want to automate that? We can help you with that. Is there as much pain? Probably not, but we have a few customers in that bucket, and that's just because there is no RevOps. Lative is helping organize the data and make it a bit more structured. So that's it. But generally, then when you start getting 15, 20 salespeople, then this starts to become a problem. And it starts to become quite time consuming. And so that's where we play. And then, of course, we start to see it when we talk with Avalara, 400, it's a customer of ours, 400 plus salespeople. Much bigger organizations. And that's where you need the navigation of where's the productivity coming from or where it's not. Where can I go look at the new business team in the UK? Or it might be, let's go look at the new business team on the East Coast or West Coast, wherever it might be. What do those productivity levels look like? So there is a range that we operate within, but that's, yeah, I hope that helps.
Yeah. Yep. And one more question before I let you guys go. And actually, I'll look to both of you to answer this. I'll let you decide who wants to answer first, though. You have to pick one thing and one thing only. Run-on sentences are not allowed. What is the one thing, the one differentiator that puts Lative on top in terms of spreadsheets or other products that people could use to do this? What's the one thing that truly sets you all apart?
You go first, Werner. I know your answer anyway.
Buddy. Matt, for me, it's productivity. You've heard us talk about that so much. And when we mean productivity, we mean what's the average yield per rep per unit of time. And that's foundational. I've learned it over the years. I struggled with quotas. It was just, they're just inconsistent. They're unstable. to measure performance and how we track. And so for us, it's productivity. We transform your data to give you productivity. I know it's very complex to do manually. It's hard. That's why most organizations don't do it. They do it at a very high level because that's more easier to do. But you need to understand your productivity to a dimensional level. So for me, that's very much where I feel we differentiate it and is core to Lative.
I would obviously answer the same because Werner's my boss, so I hope, no, I'm joking. Because the strength of the product is the core, the backbone. But what I'm going to just add something different because I think that the agility that it gives you, I think, is the difference for me. Because once you have the productivity and efficiency that is the granular level we give with the different dimensions, because the dimensions are unlimited, you get the granularity at your fingertips that makes you as agile as a company can be to make decisions very quickly. And I think that is the business outcome that I think is big sales. I think more business outcomes. I think that's what I think has the biggest impact on our clients.
I love that. Both are great answers, and I fully support both of them. I can see the impact that both would have as well, and I would agree too. Like I said, just the opportunity that something like this presents and gives you over any other options that you have in the market is pretty incredible. Ollie, Werner, thank you guys very much for giving us the walkthrough and everything today. For anyone interested, you can go over to lative.io to book a demo. You saw Ollie and Werner's contact information on the screen earlier. Send them an email, connect with them on LinkedIn, or they are in the RevOps Co-op Slack group as well, and you can always engage and converse with them there. So with that, though, I will let you guys run. Ollie and Werner, thank you very much for doing this demo that certainly did not suck. I really appreciate it, guys, and I'll see you on the flip side.
Thank you, Matt.
Thank you, Matt.